and welcome back to Boni's Life, your essential guide to navigating the thrilling and sometimes bewildering world of cryptocurrency. I'm Boni, and this week we're diving deep into the digital trenches to prepare you for what's shaping up to be a pivotal week in the crypto market. We've got a packed agenda, a technical deep dive into last week's roller coaster, a look at the seismic events on the horizon, insights from the big wigs at Grayscale and Bitwise, and of course, actionable strategies to help you trade smarter, not just harder. So, grab your coffee, silence your notifications, and let's get into it. All right, let's start by looking back. The first week of 2026 has been a fascinating case study in market psychology. After a blistering end to 2025, where Bitcoin flirted with all-time highs, we've seen a period of consolidation. Think of it as the market taking a collective deep breath. Bitcoin has been dancing around the $91,000 mark, showing some strength but also a bit of hesitation. We saw a high of around $91,462, but it's been a bit of a tug of war. The bulls are trying to push us past that psychological $92,000 barrier, but the bears are putting up a good fight. The daily chart shows us that we're in a tight range, a classic consolidation pattern. This is where the market is trying to decide its next big move. Are we coiling up for a spring upwards, or are we building a top before a correction? The technicals give us some clues. The key support zone, as highlighted by analysts like Gunay Kaimaz from investing.com, is between $85,000 and $88,000. This is the floor we need to hold. We've tested this area twice and bounced, which is a bullish sign. It shows there are buyers willing to step in and defend this level. On the flip side, we have a formidable resistance zone between $99,000 and $102,000. This is the ceiling we need to break to confirm a continuation of the uptrend. A weekly close above this level would be a very strong signal that the bulls are back in control. The Relative Strength Index, or RSI, is hovering around 60, which is in neutral territory. It's not overbought, which is good, but it's also not oversold, which means we could go either way. The Bollinger Bands are also tightening, which often precedes a period of high volatility. So the market is whispering, a big move is coming. Now let's turn our attention to the week ahead because it's a minefield of potential market-moving events. First, in the crypto space, we have a few things to watch. On January 6th, we have a token unlock for Redstone, which will release about 2.29% of its supply. Token unlocks can sometimes lead to selling pressure, so that's one to keep an eye on. But the main event, the one that has everyone talking, is the Ethereum BPO Hard Fork on January 7th. This will increase the gas limit from 60 million to 80 million. In simple terms, it means the Ethereum network will be able to process more transactions. This is a significant upgrade and could be very bullish for ETH, potentially reducing transaction fees and congestion. We also have a testnet launch for Stellar XLM on the 7th, which is a positive development for their ecosystem. But the real fireworks this week are likely to come from the traditional financial markets. We have a deluge of economic data coming out of the US, and as we know, what happens on Wall Street doesn't stay on Wall Street. It sends ripples or sometimes tsunamis into the crypto market. On Wednesday, we have the ADP employment report and the ISM services index. These are key indicators of the health of the US economy. But the main event, the Super Bowl of economic data, is on Friday. The non-farm payrolls report, this is the big one. It tells us how many jobs were created in the US last month. And it's a crucial piece of the puzzle for the Federal Reserve when they decide on interest rates. A strong report could mean the Fed keeps rates higher for longer, which is typically bad for risk assets like crypto. A weak report could signal that the Fed might cut rates sooner, which would be a tailwind for our beloved digital assets. So, with all this short-term noise, what's the bigger picture? Well, the consensus among the heavy hitters is overwhelmingly bullish for 2026. Grayscale, in their latest outlook, has dubbed 2026 the dawn of the institutional era. They believe we're at the beginning of a structural shift, driven by two main forces, the macro demand for alternative stores of value and improving regulatory clarity. They're so confident they're predicting a new all-time high for Bitcoin in the first half of this year. And they're not alone. Bitwise, another major player, has made some bold predictions. They believe that crypto ETFs will purchase more than 100% of the new supply of Bitcoin, Ethereum, and Solana. Think about that for a second. The demand from institutional products outstripping the new supply being created. That's a recipe for a supply squeeze. And as any economics student will tell you, when demand outstrips supply, prices tend to go up. We're also seeing some eye-popping price targets. Standard Chartered is calling for $150,000 Bitcoin by the end of the year. And JP Morgan is even more bullish, with a target of $170,000. And it's not just Bitcoin. Standard Chartered has a staggering $8 target for XRP. With XRP currently trading around $2, that's a potential 286% upside. Now, these are just predictions, and as we always say, you should do your own research. But it's clear that the smart money is betting on a strong year for crypto. The narrative is shifting. We're moving away from the purely retail-driven speculative frenzy of past cycles and into a more mature, institutionally driven market. This means we might not see those face-melting 1,000% gains in a year, but what we might get is a steadier, more sustainable uptrend. The 4-year cycle that has defined crypto for so long might finally be breaking down. So how do we trade this? How do we navigate the opportunities and the risks of the coming week? Well, let's break it down. First, given the major economic data coming out, especially on Wednesday and Friday, it would be prudent to be cautious with leverage. Volatility is almost a certainty. If you're a long-term investor, this could be a good time to dollar cost average into your positions, especially if we see a dip on the back of strong economic data. If you're a more active trader, the technical levels we discussed earlier are your roadmap. The $85,000 to $88,000 zone is your key support. A bounce from this area could be a good entry point for a long position, with a tight stop loss below. Conversely, if we see a rejection from the 91,000 or 94,700 resistance levels, that could be a signal for a short-term short position, targeting the support zone. The Ethereum Hard Fork on Wednesday is another potential trading opportunity. A successful upgrade could lead to a rally in ETH. You could consider a long position in ETH leading up to the event, but be mindful of the buy the rumor, sell the news phenomenon. It's often wise to take some profits before the event itself. For those interested in altcoins, the Clarity Act, which is expected to be a major topic of discussion in the coming months, could be a huge catalyst. Bitwise predicts that if it passes, Ethereum and Solana could see new all-time highs. So keeping an eye on regulatory news is just as important as watching the charts. And finally, a word on sentiment. The Fear and Greed Index is currently at 26, which is in the fear territory. As the old trading adage goes, be fearful when others are greedy, and greedy when others are fearful. This could be a contrarian indicator suggesting that now is a time to be looking for buying opportunities, not panic selling. And that's a wrap for this week's crypto market deep dive. We've covered the technicals, the fundamentals, the major events, and the strategies to help you stay ahead of the game. It's going to be a pivotal week, so trade safe, stay informed, and remember that in the world of crypto, knowledge is your most valuable asset. If you found this video helpful, do me a favor and hit that like button, subscribe to Boni's Life, and ring that notification bell so you never miss an update. I'll see you next week. Stay sharp.